There's this growing evolution of bringing real world assets to the crypto community through different initiatives and different projects that I think that over time you could have these parallel worlds of where loans get transacted, who is ultimately the owner of those loans, where it may not have to be the established incumbent institutions.
Is there any way in which the crypto market and the housing market are intertwined in terms of, patterns that you're seeing when one goes up, the other goes down, or do they move in tandem, or is it completely separate in how the market fluctuates in both?
I think that the crypto and the housing markets today are fairly correlated. And that correlation is not because of crypto related to real estate prices. It's because it's related to rates. And with rates rising, it does impact housing because it makes it more expensive for someone to be able to buy a home because of the carrying cost. And then now you're seeing a very similar dynamic with crypto prices. With rising rates, there's a greater opportunity cost to hold crypto assets. When rates were very, very low, it was more advantageous because your opportunity cost was effectively zero. So anything that we do, any kind of return, whether it was equity markets or crypto prices or real estate, was an attractive investment. Now we're starting to see a little bit of divergence around that. So I think we'll still see the correlation. But I think for many people, the aspect of buying a home and investing in housing, it's really a personal life decision and lifestyle decision of where you are. But I think we'll see probably a very strong correlation to risk assets. But I do expect that many homes, and particularly in the US, we will still see over $1 trillion worth of homes bought in this environment where we'll be coming down from 3 trillion of mortgages originated last year. We're still going to see plenty of people buying homes in this country.
Mm-hmm. And so I know it's tough to predict, but how do you envision this relationship between cryptocurrencies and real estate evolving in the future? Do you think that what you're doing with Milo is sort of the maximum opportunity there is to mix these two worlds, or is this just scratching the surface and of what's potentially possible in the future?
We think that this is just the beginning. We just wanted to be that first company to come along and say, we can think about underwriting an individual a little differently. We can consider their crypto wealth because we know what the long-term goal is for that individual. But I think there's a number of places where, bringing someone's liquid digital collateral and wealth into a real estate transaction does make it less risky for a lender. And for an individual, it allows us to be able to extend credit to someone that otherwise couldn't. So I think that is step one. I think what comes next is there's this growing evolution of bringing real world assets to the crypto community through different initiatives and different projects that I think that over time you could have these parallel worlds of where loans get transacted, who is ultimately the owner of those loans, where it may not have to be the established incumbent institutions, but that potentially you can get a more diversified pool of individuals that want to earn interest. And hopefully there will be companies and players that bridge both worlds and then hopefully deliver a much better and more seamless lending and borrowing experience through this ecosystem. But this is sort of step one, which is let's try to extend credit to great consumers and help a lot of people realize that crypto does not necessarily mean a riskier transaction.